Okay, fam, welcome back. So today we're going to be going over the buy, sells, and dividends for the week of October 13th through October 19th. So with that being said, let's get it. All right, so you guys can see we have an exorbitant amount of cash set aside here in this account that we're looking at right now. There is a reason for that. I will circle back to that later. I'm going to save the explanations of kind of the reasoning behind everything we're doing right now towards the end of the video. So let's go ahead and get into it. All right, so the first thing I want to go over here is the M1 Finance accounts. So for this week, you guys can see we got 63 cents from Leggett and Platt. Again, I don't know why M1 keeps doing this, but three separate payments, probably the same dividend payment from HRZN. So 32 cents, 11 cents, 2 cents. So again, not much this week, but we really haven't been focusing too much on the M1 Finance account for quite a while now, because again, like we told you guys a long time ago when we first, right around the time we first started this channel, that at some point we were going to start scaling more towards crypto and less towards dividend paying stocks. M1 Finance, we don't own any crypto on this account. Okay, so we told you guys this a long time ago that this was going to happen. So that's kind of what you're seeing now is a reflection of what we said back then. Okay, so basically $1.08 in dividends for this. So now if I go over here to the trading tab, so there is a few trades that got placed this week, and again, we're just kind of repositioning. So we took a profit out of QYLD, basically just got out of the position, and then moved a piece of the money into ACP, because again, ACP, if I go over here, go over to the chart over here, you guys can see ACP is currently at a perfect dip buying zone. So again, once we get our bags filled, like let's say we're looking at a dividend paying stock that we want to get paid $50 a month for, just pick some random number. So $50 a month on whatever dividend paying stock, right? Let's say that this is the one we want $50 a month on. So we get to that $50 a month at whatever price, and then we don't buy anything more until it gets down to one of these buy zones. Well, we're not at the $50 a month, but we have been buying more of this at these dips, because again, you guys can see this is basically a 4-year support. It was the pandemic lows, and then it rocketed, did a 2x in price, kind of got beat down a little bit, but then you can see it looks like it's about ready to start churning back up. So that's the reasoning behind that. QYLD does kind of have a little bit of NAV erosion over time, but again, you guys got to understand it is as a result of the Fed hiking rates. The macro, what the Fed does is always going to overpower the economy and the markets, because that's the way it's designed to do. The government delegated them authority over the monetary system. So, when they have to choose between hyperinflation and saving the country's currency, naturally they're going to choose saving the country's currency, because again, if you don't have a currency, you don't have a country, right? And to maintain global dominance, they have to make sure that their currency stays at that 2% inflation target. That's just the way it works. Okay, so when they raise rates, a lot of these companies that don't have a lot of pricing power, a lot of cash reserves, like the big tech have cash reserves, but smaller companies, smaller positions like ACP, a lot of the stocks in the Russell 2000, they don't have a lot of pricing power, so they kind of suffer as a result of the Fed rate hikes. So basically what I'm saying here is as they cut rates more and more and more, this thing should theoretically go up. Okay. So October 15th, which was, when was this? This was a while ago. So yeah, that was on Tuesday. Okay, so we bought back into QYLD, then it went up again, then we decided to go ahead and get out, which I'm actually going to show you guys right now. So going over to the portfolio. We basically went ahead and got out of this position today. And again, this is not going to take effect till Monday because the markets are closed. The stock market is closed right now, as you guys know. So futures opens at what time is it? 3 p.m. tomorrow Pacific Standard Time. So if you're on the East Coast, it'd be 6 p.m. And as you guys know, crypto's open 24/7. It never closes, not even for holidays. So we're getting out of this one, and then we're going to reposition, or I should say concentrate into PDI. Again, we want to get PDI and ACP first. up to $50 a month, and then we're slowly over time going to move some of these other ones into that kind of $30 to $50 per month range. Okay, so PDI here, you can see it is currently at a discount by about $1 per share compared to the average price here. We got 86 shares, so you can see that we're loading the boat on this going for Monday morning. And again, this PDI has been much cheaper over time, and we did not buy the dip. But again, it kind of really depends on what we're focused on at the time and also what the charts look like. So we didn't buy down here, even though we probably should have. I mean, that would have been a golden opportunity. But you can see why we're buying now, even though it's at resistance, is because we're getting that golden cross and the break of the downtrend. Plus, you got the inverse head and shoulders there. There is some potential for a bearish divergence, although I don't think it's going to play out based on the way the charts looks. So that's just my opinion. So that's what's going on with that one. Now going over here to the Grayscale Trust, you can see the positions are the same. We have not bought or sold anything. Going over to the transaction history here, you can see, of course, we want to keep it transparent here. We don't want you guys thinking we got any secret trades going on. I will say this, if we were crypto whales, we probably would not tell you, but we probably also would not have made this channel because whales most of the time like to remain anonymous. So that's not something you have to worry about. I know a lot of people in the crypto space consider stuff like that, but yeah, chances are pretty good we probably would not have even made this content for y'all if we were, we did have 1,000 or 5,000 Bitcoin or something like that. So anyways, here's the history. You can see it. The last time that we actually did make a nice juicy profit was back in May of 2024, earlier this year, and that kind of lines up with Bitcoin having reached the RSI having been oversold or overbought. I mean, actually, if I go back here and take a look at Bitcoin, any Bitcoin chart, doesn't really matter. We'll go BTC USD. Choose Bitstamp, which I believe is the one that we're using. Yes, so this is the one that we're using. So you can see there was a second peak here, but it was a lower peak. And we were saying, okay, there is a chance that we might be getting some kind of bearish divergence here. I'm pretty sure we told you guys this. So price slowly, well, okay, this wouldn't have been bearish divergence, but basically we had so you had a peak, then you had a higher peak. And we're looking at this saying, okay, this thing is getting seriously overbought. We might consider taking profit. And when we realized that the second peak here was not actually going to go back above that previous peak, we decided to go ahead and get out. Again, these overbought signals on Bitcoin are pretty good indicators for a top or being near a top in crypto, because again, it's very, very difficult to time the top. So, but it is beneficial if you can do it like 90% of the way to the top. It's always beneficial. So you can see over the course of time, we have taken some profits on these positions. We have had some of these, quite a bit of profit actually. But again, if we do position back into these before the end of the bull run, we'll certainly let you know. Okay, so next thing I want to go over here is the native crypto. So you guys can see nothing's changed here. Okay, so we still got Filecoin, AIOZ, Dash, Horizon, Render, Banker, Kronos, or Crow.com. It actually used to be known as MCO token. I forget what the M stood for, but they used to, I think they used to have a Crow token and an MCO token, if I'm not mistaken, and then they got rid of the MCO token. Those of you guys that are old school in the space. So Ethereum, Scale, Wrapped, Luna. Again, if that one does 1000x, you can best believe we're going to find a way to offload it. Engine Coin, Litecoin. So we still have all those. We will be adding to these in the coming months. That is the plan. Everybody's got a different taste in crypto. Some people want the native crypto. Some people want the Grayscale Trust. Some people want the spot Bitcoin ETFs. Some people don't want anything to do with crypto except Bitcoin. You got your Bitcoin maxis. Some people do dividend paying stocks. Some people just simply buy the crypto stocks like Coinbase and MicroStrategy. Some people will even do other things like, your 2x, 3x leverage on the Bitcoin, on some of these Bitcoin ETFs, like MSTU for the options premiums, or CONL or BITO. BITO does pay a dividend. Then you also have Maxi that pays a dividend, and you have MSTY Coney. So everybody's got their flavor in crypto, but we're just showing you what we currently got going on. Okay, so that's all covered. Now we're going to go over to Webull. So same thing here. The only position we have left here in OARC, we're expecting it to go back up as the Fed cuts rates. We'll probably get out maybe roughly about break even, maybe a little bit above break even at some point. 84 shares here. And again, I don't think OARC is necessarily a bad holding. I think we just got into it a little bit premature because the Fed hadn't been cutting rates yet. But, it's all in hindsight. I mean, we've still been profitable, so not really too big of a deal. So no dividend payments from this one as of right now. Again, they have them on weeklies at this point. So I think OARC is in the first week, if I'm not mistaken. If I'm wrong, feel free to correct me in the comments below. We're not real familiar with the new payment schedule yet. So, all right, going over here into M1 Finance. Before I get into this, I want to first let you guys know in terms of profits, dividends, and all that, what we did this week. So, dividends from Robinhood, we got YMAG at $54.66, Coney $256.52, QYLD, or sorry, not QYLD, QDTE $35.76, YMAX $47.59, XDTE $17.88. In terms of profits, we took profit on QYLD twice actually, so $14.71. We showed you those transactions on M1. Then we closed out our call debit spread for American Airlines for $320 in profit. Again, the profit, if I'm not mistaken, that we were slated to make on American Airlines is, trying to find it here. It was supposed to be a maximum profit of $940, but it was pretty close to max profit, so we just decided to get out early. I mean, the thing you got to understand about the call debit spreads is most people that do these call debit spreads do them on a stock that's going into earnings because, again, the earnings brings the volatility, right? So it depends on whether you're bullish or bearish. If you're bearish, then it's a put debit spread. If you're bullish, then it's a call debit spread, okay? And then you have the opposite, which is the credit spreads, but we don't do those. So the credit is when you receive money, the debit is when you pay money. So in this case, we're paying money to get into the trade, but it's a leverage trade. So again, it could make multiples equal to that of crypto. But typically people only do this into earnings, okay? And we just saw the profit and we said, you know what, the hell with it. The GME CDS that we didn't play out as expected. Not that we think the American Airlines stock is going to dump at earnings, but we just decided it's already 60% in profit, so we just take the money off the table. So that's what we did. And then the CLSK one that we took profit on, that was 2 contracts set for, looks like an 11 buy call and $12 buy call. So it got above there. We took profit on that for a $12 profit. Again, we were kind of just testing at the money call debit spreads to see how they operate. They're not really all that profitable. So, but of course, if we have a strategy, we want to test it over time and make sure it works. So American Airlines, that one was started back in late August, and then the strike prices was a $13 buy and a $14 sell call, and that was 10 contracts. Okay, so in terms of what we sold MSTY for a loss. We got out of that one. It was a small loss, $14.04. Of course, if we had waited just a little bit longer throughout the trading session, we could have sold for above break even, but is what it is. We got out roughly about a break even. Again, you got to understand the idea with crypto is we want to get out of these positions as much in profit going forward in time as humanly possible. Okay, that is the goal. We've told you guys this from the beginning. It shouldn't come as a shock that we said that we would want to get completely out of our crypto positions by the peak of the bull run, move that 100 to 300,000, whatever it's going to be, over into traditional assets that pay passive income, and then wait for the bottom of the next bear market. Okay, we've told you this time and again. All right, so MSTY, you can see it's not here anymore. It would have been sitting right below NVIDIA. So we took the 1404 loss on that. We took a $52.59 loss on JTEAI, which is a penny stock. We'll get over that in a minute. And then we bought PDI for $625. So the Robinhood dividends, $411.61. And then the profits here. So this is what the profits is actually minus $51.92 because, again, we took that big penny. Well, it wasn't really big, but it was a penny loss stock. And then the $332 from the call debit spreads and $147 from the cash secured puts. So NVDL, we did this one first on the 14th. The closing date was the 18th. It was $152 times one contract. We got out early at $70 to close, so $82 in profit. Again, on the 17th, cash secured put NVDL, closing date 10/25. Decided to get out of that one for $19 in profit, so we got paid $215 times one contract, got out for $196, and then serve. We were pretty much sitting at 100 shares already, so we decided to just go ahead and do a cover call on this one. So the expiration is the entry date is basically yesterday, and then the exit date is supposed to be on the 15th of the next month. So that's $46 times one contract. So it comes out to $147. So that brings us to a total for the week of $839.77. Okay, so why is there so much cash sitting on the side? Well, there's a reason for that. We had the GME call debit spreads expiring. Again, we've done our research on how to do this, but we kind of wanted to see how the Options Clearing Corporation was going to execute this. Because again, if you guys know anything about expired contracts, sometimes they take, for some strange reason, it can take till very, very late at night for it to actually post on your account on Robinhood. So we wanted to sit on cash, wait to see how that cleared. We could have actually increased the income this week by taking the money out of MSTY, put it into something else that has passive income, and then throwing on another NVDL cash secured put and or something else we're going to talk about in a minute called Soxel. But again, we're trying to be strategic here, and we've never had a call debit spread go until expiration. But the bottom line is the price closed at expiration below both strike prices, so the entire amount of contracts expired worthless. Again, we had 25 contracts, so we took a $700 loss on that position, but the GME position that we opened was all the way back in September, so it's not going to count for this week. Okay, so Soxel, I want to take a look at that real quick, and then we'll get into the finite details of the rest of this. So Soxel, basically what this is this is a it's an ETF of sorts that basically has pretty much just about all of the tech and semiconductor / AI companies in it. You got things like ARM, NVIDIA. I'm trying to think of what else. You got a lot in there. You got ASML, TSM, all the popular names that everybody would know about. So the thing I want to point out about this is this one, in my opinion, is very easy to predict in terms of price. The options premiums are about equal to what one contract of NVDL would pay. So one contract of NVDL per week would be about this, and the cost to get into it would be about the same as well. So we're taking a look at that. In terms of the price, we already got the levels drawn out. As you guys can see here, it's very, very obvious. This thing's basically just sitting within a huge range over time, so it makes it very easy to position. So that covers that. So we could have did that before the end of the week, but again, we wanted to just play it safe and make sure everything was good to go. All right, so I'm going to, well, you guys can see the serve call here. I don't think I need to go over that. So I'm going to go ahead and go over the actual positions that paid here this week. Okay, so YMAG is up. That's always good. All right, so we got 54.66. You can see it right there. Next one is Coney. Coney is on the rise, as you guys know, but I expect once Bitcoin gets past 74,000, the entire crypto space is going to explode to the upside, including this. So do keep an eye out on that. So $256.52 on Coney. Okay, next one's going to be QDTE. $35.76. Okay, next up, whoops, that's the wrong one. So let me go back up here. Okay, so the next one on the list here is WiMAX. Again, I do suspect WiMAX is going to massively increase in price over time as crypto continues to pop off, because in my opinion, that's what's been weighing it down as of lately. So $47.59 here for this week. Next one, we got XTTE. Okay, so XDTE sitting at break even pretty much. That's always a good sign. Maintaining the NAV, so 1708 here. Okay, so I'm actually going to show you guys the American Airlines one here, so you can see the call debit spreads for yourself. So you know that we're not just making this stuff up. We did actually do this. So again, our top strike price was at 14. It pretty much got basically above the break-even price, which means we were in profit. So we decided to take profit at that point. So you can see we got out here for $400 yesterday. All right, now going over to CleanSpark. CleanSpark is at a nice run up. We'll talk about the miners a little bit later. So we got out here for $80. Actually, I have to go over into the history to show you guys where this call debit spread was, if I can find it. I think it was this one right here. Yeah. So we sold for 80, got in for 68. You can see here that. I'm trying to find it. Does it show it? Yeah. So buy call here. Expiration date at the end of the year at 11, and then the sell call at the 12th, or the $12 strike price. Again, it's a complicated strategy. If you guys don't know what this is, do your research. And then the last one I want to show you guys here is the JTAI or AI. I can't even type today. Okay, let's try this again. All right, so Jet.ai. Again, this is a microcap AI company we were looking at. The sad part about this is we got in back here at this price and we sold prematurely. If we hadn't sold, we probably would have been up about 30% because it pretty much ripped the next day. So yeah, that kind of sucks. Probably should have been a little bit more patient, but you can see here we bought here, then sold here, and then of course the price ripped and we missed out on the gains. So two more things here actually. So Serve Robotics. Again, we took $1,000 swing trade on this one. We have not changed our position on this. We do still think it's going to rip. So we set this trade up now. We had 98 shares before, but we bought a little bit more and then did a covered call on it. So we set this trade up now basically where we bought a couple extra shares, did the covered call for 46. You can see there. So our average price is $10.10. Again, we're looking for this thing to go at least above 12 because that is the strike price. And I would say likely the share price can actually do so. So if you combine the capital gain with the options premiums, it comes out to about a 23-24% return. This thing could easily go up to $12. You can see, it went as high as $24 when it topped out. So $12 would still be almost a 50% retracement on the price. All right. So last thing I wanted to go over here is the call debit spread that we could have taken profit on this week if we wanted to. Again, we could have taken profit on this, but this is going to be a massive gainer. So we have no intention of taking profits prematurely, but you can see we were up towards the end of the trading session about $1,200 on this position on this call debit spread. And again, we are waiting for this thing to go into full-blown profit above $25 because the miners are notorious for just moonshotting and doing stupid gains once Bitcoin gets going. So it wouldn't surprise me if CLSK actually went to like $30 to $40. So anyways, this is the buy, sells, and dividends for the week. Hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.